On you, Ian.
My name is Ian Walsh, Hard Money Bankers. Today, joined with some really, really special company in this room, and we're doing this for the event coming up for market makers on the 28th here of February. It's a high demand event, and first you guys know me. You also have Gaurav Gambhir, principal at the Condo shops, Keller Williams Center City, and we are also joined with the man, the myth, the legend, Richard Oller. Thank you, sir, for spending time.
The myth, the legend.
There it is.
Okay.
So,
if only my mother knew.
So this interview series, quite frankly, I was a little nervous coming into this because all these videos that we've done along the way, I really was thinking, how do we get Richard Oller in the room and sit down and talk with him? But I felt there was a need to do justice to this conversation. I've been planning about this. I don't really plan these out too long. I've been planning this one in my head. So I know I'm going to have the video done, and then after it, I'm going to say to myself, I wish I asked that. I wish I asked this.
Just cut and retake.
Just cut and retake. But you know, one of the nicest things about you is that you're easy to approach, you're easy to deal with. You're, and I'm going to start with two things here. One is that for the people that don't know, I'm going to give a very quick synopsis, and then you can tell the story of how this works. So Richard Oller, and if I say anything wrong, tell me. Back in the 80s, you were one of the founders and pioneers of an industry being HOA management in its own right. Literally a pioneer, not a market maker so much, a pioneer of an entire market, meaning you, anybody watching this is somewhere along the line probably touched by something that you did either directly or indirectly in the real estate industry. So you had founded the HOA business or management in the 80s, and then you grew that to and took it public to First Service. Is that correct? First Service was
First Service was public. We merged with First Service.
You merged with First Service. Then you rolled that money in to build Gold Oller. Currently 900 employees across the country. I don't even know how many units you guys have, and it's going to be hard to give you the actual number on tape. So an immense player in our market. And one thing that struck me, and I'm going to stop talking because I know I'm talking a lot, but I felt like I had to get this out on tape, that was very interesting is I was fortunate enough to partner with Gaurav and Ben, your son, Ben Oller. I met him.
Oh, he's my son.
Your son. And,
I was wondering why we had the same name. Now I know.
And something that completely intrigued me was that somebody of you guys' stature, I mean, you have billions of dollars of real estate under some form of control. I always thought that you guys were going to be different. Most people would assume with that kind of stature, you don't meet many people in your lifetime that are like that. I just assumed, I know a lot of people when they see you guys probably are looking at you, trying to figure you out. You guys are what you see, right? Like today you had to schedule this meeting because you were at your grandson's school day. Like you're just family people that run a family organization that is massive. And I wonder how you keep that together and how you do that and how you're able to build upon that as opposed to maybe the stereotypical outlook of a CEO of a company. Most people don't think of the way you guys are, which is very transparent and family oriented and candid as people. So that's what my take of you is. And I'd like to hear from you because I think the world deserves, or anybody watching this, the story of Richard Oller and how you guys built such an unbelievable empire along the way. So with that introduction, can you talk to us about it?
Well, if I say I don't have a clue, is this a very short interview?
It can be, yeah. It can be whatever you want. It's all yours.
Well, I think the prelude is strained to some extent. There's no mystery or secret to our process, and there is no process to our process. It really is a function of finding opportunities, moving one step at a time, holding on to your core principles and values, whatever they may be, and getting up in the morning and going to sleep like everybody else in the world. There's no magic to this process. It really is, number one, doing what you like, and trying to encourage others around you to like what they do, which is it's really the key to success. And if you find that you can keep those two pieces together, do what you like and encourage others to like what they do, then you're going to find success. In terms of the family relationship, there's no secret to that. That's not a philosophy or a policy. That's just who you are. So it's
just that easy.
It really is.
It's just that easy.
It really is just that easy.
So they make it look easy. How about we'll put it at that? Because you guys have built like 900 900 employees.
Everything starts from a mistake. Let's go.
Okay.
Let's go back to there.
Let's do that. Yeah.
Nothing is intentional. So when I grew up and said, what do I want to be in my life? It wasn't a real estate property manager. That wasn't the first endeavor. Short of being a Supreme Court justice,
Okay.
I'm not sure what my aspirations were. But one day I decided to try entrepreneurial real estate, coming from law. And I went out on my own, left law and went out to make my fame and fortune. And I bumped into something called the Tax Reform Act of 1986, which was the last time we had a substantial tax reform other than the one we're going through now. And the Tax Reform Act of 1986 essentially reduced sources of capital for those of us who didn't have any and were attempting to do real estate investments. So we had, before the Tax Reform Act, there was a pool of people, money, that wanted to do tax-advantaged investments, and real estate was one opportunity. After the change in the law, that was no longer available. So I found myself in business one day and essentially out of business the next because I didn't have any money.
Okay.
And what you do in that situation is you take inventory and you say, okay, shall I go back and practice law? Shall I try a different profession or vocation? I don't have the capital to make real estate investments. What do I do? In my case, the answer was, well, we have a few real estate assets. They're being third-party managed. I guess what we need to do, just to cover payroll, is to take over the management. And that's how I got in the management business.
That was the start.
It wasn't a well-deliberated process that went on for years and eons. That's how I got in the management business. Now, once you're there, then you say, what can I do to capitalize on whatever position it is that I have? And in the early days, you don't have any position. So what you do is you say, do you want your garage door opened and closed? If you do, I'll do it, pay me a fee. And I'm in the management business. Okay. Do you want your apartments managed? We'll figure out how to do that. Do you want your retail shopping centers managed? In the 80s, there was a lot of distressed real estate. So the banks, the financial institutions were finding that they had a lot more REO real estate, and they were looking for more sophisticated solutions to their management disposition. So we were pretty good at that. So we did a lot of work for banks. But it was really all opportunistic. What can we do tomorrow to cover payroll today and to cover payroll on Friday? And it was really that simple. So you take it one step at a time.
Well, let's go a few steps in. So you've now succeeded 3 times, in my opinion. So,
you haven't mentioned how many times I failed.
Okay. Well, maybe I'll ask that question next. But you didn't luck into it, and you didn't. So you have the first time you succeed is starting to build it. Second time you do it is you build it to one of the large. I mean, I think the number that's circulating was somewhere to the tune of 140,000 units under management across the country at some point. Is that somewhere around correct?
That in the HOA world.
So, from covering payroll to 140,000 units to taking a company public to then buying your own units as Gold Oller. That's 3 separate incidences that you can say you became opportunistic at the right times. Like, how did you transition from one to the other correctly, smoothly, and successfully? I mean,
first of all, I didn't take the company public. I merged into a public
merged
company.
It. Sorry. Okay.
So there's a difference, but it really is. You're looking down the road. First of all, there's a lot of fear. So you say, okay, if I don't do something, what's going to happen when this opportunity changes? So you have to be dynamic and you have to be flexible, and you have to say, what's the next opportunity?
Okay.
And in the early days when we were doing all sorts of property management, what we found was the distressed management that the banks were dealing with was drying up. I mean, we were liquidating those assets, and we were liquidating ourselves out of a job. So the question was, well, what happens when there's no more REO management? What do we do next? Again, without a capital base, we weren't in a position to make serious real estate investments. So it's another moment of inventory. You have to say, what do we do? And we had found at that time that through it all, the one area that seemed to be consistent was we had a small portfolio, would be an overstatement, but we had a small inventory of condominiums and homeowners associations that we were managing, and they were still there. They didn't self-liquidate.
Okay.
The portfolio existed. So we said, well, this may not be our ideal. This may not be what we had in mind when we were children, but it seems to be something that has stability. Maybe we can grow this. And what we discovered when we were doing that was that it was a keenly fragmented industry. There were very few large players. There were no large players. It was mostly local, and was not very professional. It was mom and pops that were spin-off of other real estate organizations, and we took the position, or we evaluated that there may be an opportunity if we could grow this and scale it, and we didn't know the answer to that until we tried. So we tried, and you put one foot out, and you hire people that are right to market, and you do an acquisition, and that integrate that acquisition, and that works, and then you do more. You hire some more people, you do another acquisition, you build systems, you build procedures, you develop a track record, you start building on your track record, you continue that process, and then one day you wake up and you say, hey, we've got a business here, and it seems to be making a little bit of money. Maybe you can make a little bit more. What's the next thing that we can do to help it make more? Well, the one area that we needed, having built a system and a portfolio of assets, was we didn't have in-depth capital, so we looked for a capital partner.
Okay.
So we were out looking who would be a good capital partner, and we tried all different options. We stumbled upon a public company in Toronto called First Service that was just beginning to, they weren't in the management world, but they were hovering around it. They were doing ancillary services, swimming pool management, landscape management. They were doing all sorts of ancillary services. And we approached them and we said, do you want to be in the management business? So it was that introduction that brought us access to a new capital base. And with that new capital base, we had the ability to go on a serious acquisition program. And that's how what was Wentworth Property Management became First Service Residential, and that grew exponentially.
And now we're in Gold Oller. So now what? So talked about multifamily management, because that was where you got to that point, and then you did it again. You doubled down on your money, so to say, or you put your money back in play in a totally different venture, quite successfully currently. So how did you make that decision to get into that?
Again, it wasn't a decision.
Okay.
It was circumstance. So there came a time in my First Service days when I did something that was both the best thing I ever did and the worst thing I ever did at the same time. I made a decision that I would go to First Service Corporate and become a senior executive within the large public organization.
Okay.
And in doing that, I gave up my roots at Wentworth in Philadelphia. And I wasn't good at that. And I wasn't a good public employee with a large company, no matter what my title or position was.
Okay.
So that lasted about a year. And after the first year, I decided that I needed to not do this anymore. So I ended up selling all my interest in Wentworth and the First Service Residential to First Service Corporation. And I was on the sidelines. Well, I was too young to be retired, too old to start over again. So I called a friend of mine whose company I had purchased, who was still in the real estate business, Jeff Goldstein. I said, Jeff, I have a little bit of money. You've got a company. I need a home. Let me give you a check. I need a partner.
Okay.
He said, send me a check. I'll make you a partner.
And that was it.
And then that was the beginning of Gold Oller.
Wow. Okay.
So Jeff was a major player in the affordable housing area. He has developed and operated affordable rental housing, and is nationally prominent in that area. And that's what I focused on with Jeff for several years. And then the 2008 crash hit, and we had been doing some opportunistic investing along the way. But we realized that after the crash, it was time to step up and begin acquiring aggressively. And that's when we went into a serious acquisition mode with Gold Oller. And over that period, since 2009 to today, we've probably acquired about $2 billion worth of multifamily assets.
So do you recognize, so everybody was scared to death of the word.
But one asset at a time. So it's not like you go out and raise $2 billion and we go out and we buy $2 billion worth
But
of real
one
estate.
asset also is not your average single family home. You guys buy huge assets.
We were fortunate in that at that point in time we had access to the capital that would support large transactions.
Yeah.
And not our capital. So we had partners that were willing to invest with us so that we could buy very large properties.
Interesting. So you guys, did you recognize that crash happening and realize this is go time in 2008, historic go time? This is we have to buy and we have to buy now.
I have tremendous foresight and great instincts. So what happened was, when the market was down to 9,000 and people were jumping out of windows, I said, "Whoa, I think there's a crash happening."
I think it's happening. This is what it looks like, right? Yeah.
And after that happened, there was everyone was looking for where they were going to put their money with some stability. And the stock market clearly had established that it wasn't safe and secure. Single-family housing was obviously in a major depression, so people were not running to invest in primary and secondary residence or to invest in rental housing. But apartments in that environment continued to be performing. And particularly apartments that weren't in gateway or coastal markets, you had an opportunity to buy at good rates, and good capitalization, and achieve good yields. So we started doing it. It seemed to work well, and we continued the process. Put together a team, built the infrastructure to support it. We continue to do that. We continue to build infrastructure. We continue to look for and hire great people, and that again is the key to the process. It really there's no. I would like to tell you that we had nice 10-year plans that were consistent and well documented, and that we've lived to them. But the truth is that's not how it worked. Mm-hmm. It worked by being attuned to what we liked doing what we liked well, with the diligence and dedication, making mistakes, fixing them as we went, living up to what we promised, and jumping through hoops if we found that difficult, to make sure that we did do that, so that we could build upon our reputation, and that's what we do.
So I was going to, and
the same is, I look at you guys, I look at what you guys are doing, and I say, holy cow, I wish I were doing what you guys are doing, because you're on this cutting edge of the next trend in real estate. I mean, it's funny, because as I'm out buying apartments, some of our large investor partners are saying, don't you want to do single family housing? And I said, no, I don't do single family housing.
Why?
Why don't I?
No, why are they asking that?
Because it's become a serious niche in the real estate market. Single housing, after the crash, because the housing prices depressed so low, the large institutions realized that there could be an investment opportunity, and some of the big boys got behind it. Well, that inspired, a wider pursuit of single family housing rental management. Huh. And you guys are on the cutting edge of what is a very substantial, industry. So I look at you as, where I was, and at a much younger age, and say how impressed I am with what you guys are achieving.
It's a little bit better.
It's
we
a
feel
lot of work
pretty,
to go.
yeah, that feels pretty good.
No,
right?
it's truly remarkable.
It's very nice of you to say that.
That is
going
very
back
much.
to you again, because everyone wants to hear your story today. But when you're talking about one step at a time and building the company, with now having access to capital, how difficult is it to say no to an opportunity? You must be looking at hundreds of opportunities. The team is looking at so many of them. I'm sure they're so close to each other, because you know your underwriting right now. It might be few points up and down in what you like. What is the triggering point of helping you make that decision? Because you could be buying way more because you have access to the capital now.
Well, you need discipline. I mean, you really do, and capital can make you stupid. So you have to be careful. Fortunately, our capital's not stupid, and neither are we. So I'm not necessarily certain that if we were inclined to make silly investments, that our investors would support that decision. But the process is a disciplined process. We have a team of people that are very good at looking at and reviewing opportunities. We review them, we vet them, we look at hundreds of transactions. Out of the transactions or opportunities that we look at, we boil them down to a continuing pipeline of a handful of assets that get our secondary due diligence and our real attention. And out of those, we're lucky if we can buy 3 or 4 of them a year. They're larger transactions, so it makes a difference. But that's the process. There is a secret ingredient to that. So after the Harvard-trained analysts and our due diligence team and all of our experts vet and go through this, then Amy and I get on an airplane and we go look at the asset, and Amy says, "No," and we don't buy it.
So the final
Amy is Richard's
checkpoint
wife,
is
by
Amy.
the way.
Okay.
The final checkpoint is Amy.
So how do we hire Amy for
Amy
our...
Amy is and which, by the way, I say that facetiously, but it's not, because the truth is, no matter what the books and records show, what the projections show, where the history is, real estate is still fundamentally a personal decision. You have to look at it. You have to have a sense of the potential and the history, and it's not something you can do without having that that innate sense, or it's not something we do without assessing it. There's nothing we've bought that Amy and I and our entire team haven't looked at, physically touched it.
Wow.
And it's not just the assets, it's also the people associated with them. It's as important to me to spend time with the current property managers and the current maintenance superintendents as it is to tour the property, because I'm going to learn a lot more about the character and culture of the neighborhood, the property, the community by talking to them than I will in spending an hour and a half walking around.
And data can't show you that.
Data can't show you
Data
that.
can't show you that.
So how many assets do you visit a year in your portfolio?
A lot.
A lot.
Yeah, I don't count them, but a lot.
So-
We're on
so-
the,
so
and
you-
because they're not local, we don't. One of the ways in which we've been able to be prolific in our acquisition is we're not limited geographically. So we're based in Philadelphia, but we're not a Philadelphia-centric company. We acquire in the Midwest and the Southeast. We go as far west as Houston. We're opportunistic operators. So we're on the road a lot.
So would you say that many people in your position are not as hands-on as you are?
The industry's taking a different approach. I think that it's as there's been consolidation in the multifamily world. Years ago, a family built an apartment complex, and they owned it forever. And then they built another one, and they owned that forever, and then they handed it off to their children. That's how apartments were built and operated. Today, it's really more institutional. So you have a lot more financial craftsmen involved in it than you do owner operators. So in that sense, with the REITs and private equity and the large owner operators, it's become less personal. So that's a loss, I think.
So you think that that's an actual added value in your organization, which is defined as better than other people, that gives you that edge?
You need both. You need to have the financial acumen, and you need to have the ability to analyze and to operate as if you were a large institution. And some of our capital is from large institutions, so we need to be that responsive. But it still comes down to a personal assessment of are we going to be able to operate this asset? How are we going to add value? How are we going to be able to beat or exceed our competition in this market? And you have to have a feel for that, and there's definitely a personal component to it.
That's fantastic. I think it's hard to find, in my opinion, from what Richard and Amy do on a daily basis, and the team does. They go and look at the properties themselves. I think that's a value that not many people in this industry have, and they feel that they can pass it on to somebody else by doing it, and it's a great thing that you do.
Well, and also in terms of the team that we build, the team, it's really the art of, if there is an art in doing what we do, and I'm not sure that it's keenly codified art. The art is being able to inspire those who work with you to have that same sense of, that same proprietary sense, and the same type of commitment and resolve. And that's how you build the culture of an organization. And that's really been our success. It's not the number of units that we've acquired or the buildings that we've done or the financial success that we've achieved or haven't achieved. It's really our ability to build an organization based on those concepts of an organization that's vested with the right culture.
And then your team sees that too.
They are. They don't see it. They are it. People
and
don't. It's interesting. Most of the people who work with Gold Oller don't say I've worked for Gold Oller. They say they are Gold Oller, and they are.
Team culture makes a big difference.
Team culture makes
it's gotta
it
make
huge.
you feel good hearing that.
It's huge. A new employee joins our company, and a typical blast goes out. Welcome new employee. Well, that new employee will be greeted with several dozen emails from employees from around the country who are just reaching out and saying, hey, we're here. Welcome to the family. We're here if you need any information. We're here to help and support. What a great choice you've made, but know you're part of the Gold Oller family. And to see that really is rewarding. To know while I certainly value, I take interest in everything that we do, as does Amy. I'm well confident that if I don't show up for work tomorrow, next week, next month, and next year, that we've been able to leverage this opportunity with a team of people, many of which are, if not all of them, are much brighter than I am. And are vested with the same type of orientation, the same type of culture that we value, and they'll do a great job. That's the depth of the organization. That's
the end trick: is get the culture right, and everything else falls into place if the right people are around you. I always notice, and I think to this day, we're the second generation behind Richard in terms of coming up, and Ben and yourself, me, and I don't believe that people come together and do business, especially in a partnership, out of chance. I think there's a reason they come together, certain assets that fit, there's certain values that fit, and what you're telling me is that's right. That's true.
Definitely.
And
it's not money. If your only motivation is this is where I can make the best living, this is where I'm going to make my best yield, it's the wrong choice. Because it's the intangibles, it's that sense of belonging, that camaraderie, that sense of of shared vision that makes you want to get up and work every day. It makes it good, makes it fun. I come into your offices and I'm energized. I'm energized just being here, and that's not a function of how much you're paying people. Mm-hmm. It's a function of they're feeling that energy. They are that energy. Mm-hmm. You can't manufacture it. Mm-hmm. So it's not most of it. It's pretty much all of it.
It's what it's all.
That's what it's all about.
If I may ask you,
go ahead, man.
So when talking about people, and there's certain people who are going to be making decisions and acquisitions.
Yeah.
And at that level, with funds, with capital from the REITs or investment funds and large corporations, you have a seller who owns few thousand properties at times, and you have a buyer who owns few thousand properties. Now there's two megastars sitting in a room with attorneys all over the place, and they're negotiating. And there's a big ego on that table from every angle. How do you deal with that kind of negotiating? You're on the buying side, so you're coming in, but the seller thinks he's sitting on a gold mine. We see that at a smaller scale, a small landlord or a seller and a buyer, but you're dealing at a much different level.
It's really not how it works, at least in this environment, this post-crash environment. In that area, it's become much more homogenized. So really what it's about is a seller is not interested in my culture. I'm interested in the culture of his people, her people, but they're not interested in my culture. They're interested in two things. Do we have the ability to close as we say we do? So do we have the performance ability? And how easy of a process will it be for them to get to a closing table? That's all the seller cares about. So our task is to make sure that a seller is aware that A, we have the capability, and B, we have the credibility. And that's been established over the last dozen years by our doing with sellers what we say we're going to do. So if we are committed to buy a property at a given dollar figure, unless there's really a breach in due diligence, we're not retrading. We're buying it for the price that we agreed to on the time frame that we committed to buy. That's what the seller cares about. That they understand that and believe that we'll do that puts us at an advantage to other prospective buyers, even if we're not the highest dollar.
So that comes back to a statement you made earlier, which I think is a really good closing structure to this interview, which is I have found watching you guys, watching everybody, honestly Gaurav as well, very much so, more valuable than money is your reputation. And then whether it's reputation of credibility, whether it's reputation of your friends and family, I've heard about it, you've read about it in like Warren Buffett's autobiography. He spent a lifetime building a reputation. It takes you 1 second to break it down. But you don't really understand that until you experience people that build everything around them based on their reputation. And whether it was, that when the buyers or the sellers come to you, you have the reputation of closing. You're going to close. So that's a reputation you built over a track record. You also know that when you say you're going to do something, it happens, and people start to learn from you that way. We had a discussion before you came in here of a guy that your reputation somehow jumped overseas and indirectly came to us just because of your reputation. So it seems to me like that is your most paramount thing to protect, is the reputation of whether it's yourself or your company or the people around you. It seems like an immensely important thing.
It is, and again, it's not so much a matter of philosophy as it is a matter of course. So it really is not, well, what can we do to enhance, what do I do to enhance my reputation? That's not a question I ask myself when I wake up in the morning. Mm-hmm. What I say to myself in the morning is, what's the right thing to do here? I mean, what is it that we've told somebody we're going to do? And to the extent that we can do it, that's what we're going to do. Mm-hmm. And if we can't do it, then we shouldn't say we're going to do it. Or if there's a problem and we have really a legitimate issue, then we have to be candid and transparent and discuss that, immediately. So it's just a function of an orientation. And I've found that in course of conduct, that type of transparency seems to work best for me.
I love it. I could literally sit here and ask. I mean, I'd get a bottle of wine. We could sit here all night, but Richard is...
Except I'm not allowed to drink until I lose another 30 pounds.
All right.
So what's a bottle of wine going to do for me? It's going to have to be seltzer.
Seltzer for the rest of us. A lifetime of questions could be asked. It would be nice at the panel. I'm really excited for it because it was designed for 4 guys that... And this is how I explain the Market Maker panel, is this. The individual investor, which is most people in the area, they do a few transactions a year, and their scope of perspective is those few transactions, right? That's all they really know about the market, what they see on TV. You put a room full of guys such as yourself together in specific niches that are absolute either pioneers or kings of their industry, and what happens is their perspective is immense. Like, you can see the world from a different view. Therefore, when you're in front of a room and somebody says, hey, I'm not going to ask the questions now because these are good questions for the panel, but hey, what would you need to see as a red flag for this industry to turn? What are some hopeful things you see coming down the line? These are questions that when somebody like you answers them, it's from a whole different perspective.
Yeah, you know what, you're going to find the same. I think you're going to find a lot of the same answers that I'm giving you. I give you an example. I know Alan Dom is on the panel. Mm-hmm. Alan Dom is the hardest working man I've ever met. I don't know how much money Alan has. It's irrelevant. Alan will still go and show a house at 11:30 at night or 8 o'clock in the morning, and he'll be there with his suit and tie all dressed up, and he'll still do what he's been doing for 35 years. And Alan Dom could have $14 billion, and he's still going to do that because that's Alan Dom. Mm-hmm. And it's been one step at a time. Now, quietly, he's probably amassed a fortune and owns the entire city, and we don't know it. But that's how he did it. And you're going to find the same is true. It really is. It's a function of sticking to what you know, doing it because you like it, and doing it well. And then eventually, if by the way, it requires a little bit of luck. Timing is not an insignificant component. I remember early on in my career being on a panel with some very heavy hitters, and whose names I won't share with you, but they were pretty substantial hitters, and I wasn't. So everybody was going down the room, down the panel, talking about in their introduction, what they were about. And one was about, multi-billions of dollars of this, and the other was about this, and they were all very substantial. They got to me and they said, "How did you get to your position?" And I said, "Really bad timing." That's how I got there. Really bad timing. So timing is not to be minimized. The key is stay in it till the timing's right. So it has to be that you have the skills and you have the approach. The timing will eventually be on your side.
And be ready to take the opportunity.
And then be ready to lurch upon opportunities when they come. And when they come, someone once told me, I thought it was a good thing, when you see opportunities in the sky falling down, go out with an umbrella, catch them, because you want to deal with the timing as it occurs.
Good saying. Good saying. So, Richard, Gaurav.
It's an upside down. It's an upside down.
I pictured it that way. Yeah, I pictured it that way. I appreciate both your time, guys. I appreciate it. Gaurav just got back from traveling. Said, I'm coming to this. We're sitting down for this interview. Richard, you just flew in. So I really appreciate both your time. I really do. I was extremely nervous for this interview. So thank you very much.
I have no idea why you'd be nervous. It's crazy.
I was. I feel better now.
To be around Richard.
I feel better now.
Doesn't know him.
Yeah, I feel better now.
Thank
Thank
you,
you, sir.
Richard.
Appreciate
Bye,
it.
guys.
All right.
Okay.